Okay, good morning, everyone. Yeah, you're most welcome to today's market snapshot. You're here with Nobert Kiza, and I'm going to be taking you through today's snapshot, which is for Wednesday, the 9th of August. We have quite a number of developments, of course, from yesterday. And these developments have been largely because of the Italian government's decision on the tax. We had quite a bit of movement, especially on the major currencies. We've also had a bit of movement on the indices, and this is largely because of the proposal. It's just a proposal. It hasn't yet been implemented or passed into the law. And the major information regarding the Italian bank crisis we had yesterday was that the government, under the new Italian Prime Minister, had indicated that they are potentially going to tax banks 0.4%. Rather 40%. So the 40% tax essentially is to be targeted on the bank's net interest margin. So that net interest margin for the banks, they have been getting a lot of high net interest margin, and this is because of the current high interest rate regime that is currently taking place over in Italy. So the reason why we had the slump we had on the Euro stocks, as well as also on the US indices and the Euro indices, as well as also on some of the currencies like the pound and the euro, it was largely because of that news for that tax. So now, later in the US session yesterday, we had a clarification that came in from the government, and they were saying that the tax is going to have a cap of 0.1% of the bank's assets. And the reason for that, obviously, is because they needed to bring some bit of calm into the markets. As you know, there was a lot of fear yesterday. We had the VIX, which is the fear index, jumping up by as much as 14% towards the mid-US session. The VIX then, cut a bit of its gains, and currently it's standing at around 15.66. So I expect today we are going to have quite a bit of recovery. Of course, the other current sentiment that we're having on the market radar is the Moody ratings. The Moody ratings came in yesterday for the small-sized banks. And of course, I'm sure Rufas took you through that. You saw that, of course, had a bit of an impact. But of course, again, you know that the US has about 4,000 banks, and that Moody's downgrade or potential downgrade for some of the big banks does not translate into, a financial system that is not resilient. It does not translate into a financial system that is facing worries. Those are just a few, sort of like issues that some banks are going through that I'm sure they're going to be resolved. Now, secondly, yesterday, we also got some news coming in from the Fed speakers. The reason why we're having a bit of recovery on the currencies like the euro and the pound and the Australian dollar is because one of the Fed governors, who goes by the name Harker, indicated that the Fed is likely towards to the end of their rate hike cycle, and that we could potentially see some rate cuts next year. That is why we saw a very sharp recovery on the indices yesterday, and even going into Euro session today, we are still seeing that really big move happening on some of these different assets. So that is what is currently on the market radar. And as the day proceeds, we are going to just see what essentially happens as we go along, and we'll also be waiting out, most especially for the US CPI, which is coming out tomorrow. The other development, of course, guys, is also in line also with China. Yesterday, the reason why we had a very big pullback on some of the assets, especially the US indices, as well as also on gold, it was because of China's exports and imports data, which of course, as you know, indicated to us that one of the world's biggest economies might be going through a bit of, a bit of economic slowdown. So we wait to see. Again, today we also received inflation data from China, as you can see here, which showed that China's inflation is actually starting to decelerate, and we are getting a bit of disinflation. Of course, on the other end, for Europe and America, we know that inflation has been one of the key subjects of discussion for some time, and having to see that China's inflation is not worrying is a good thing for the rest of the world. Yeah. So quickly going through, yeah, you're most welcome, Francis. Hi, John. Hi, Max. Hi, Ivy. How are you? Joseph. How are you? You're saying, does this downgrade relate somehow to recession? Not quite. You can't link a downgrade to recession. The downgrades for Moody's were specifically on the small-sized banks, which of course, as you know, were facing a lot of heavy losses. And of course, this is actually one of the reasons why we're having the crisis with SVB. However, SVB's crisis, and even then, most of what has come out from Moody's is really not, I would say, a contagion risk. I would really classify it as just something that is specific to those banks. It doesn't really touch on the entire financial system as we know it, or on the fabric of the financial system. It's really just a bank-specific issue. Yeah. So the US financial system, as we know it, is strong, is resilient. That is the reason why we are still not in the crisis from March as we're in. Hi, Moses. Hi, Trader FX. Hi, FNMP. All right. So today, on the calendar, we have a number of events, and some of the events we have, as you can see there, we've had some data coming out from China, the CPI and the PPI data from China. Hi, Ngaju. How are you? I'm fine, thank you. I hope you're having an awesome morning. We have crude oil inventories coming out at 5:30. So as you know, of course, oil had a bit of a pullback yesterday. And of course, now today we are seeing that recovery coming in, as you will see on the charts. And of course, the reason for that is because, of course, as you know, the bias for oil has really been a buy bias. And that's because of the current stance from OPEC, that they want to keep the oil supply limited. Then, of course, as you know, we've been having, of course, some news coming out from the US that their reserves are starting also to US reserves are starting to decline, which of course is an indication that really oil prices are likely to start, steadily rising higher as we go along. Yeah. So without wasting much more time, I'm just going to cross over to the charts so that we can see what is currently happening over on the different charts. So we are going to start it off with we'll start, I think, with gold. I just want to go over gold quickly here so that you can see what we're dealing with there. So don't mind, you're going to be able to see the chart in a bit. Okay, so gold, last week we had NFP. And of course, the NFP jobs data came out dollar bearish. And the reason for that is because we got a digit lower than the forecast of 200K. It came in at 187K, which of course, as you know, whenever we get a lower NFP number, it's usually dollar bearish, and the market priced the NFP as a likely, sort of like slow down in labor tightness. And if we had gotten a stronger NFP digit on Friday, I do not think gold would have had this recovery it had. Now, the other thing, of course, as you're seeing right here, there was a bit of a grab on gold, this grab right here, okay? And this grab here indicated to you that actually gold is actually undergoing a bit of selling pressure. And that is why even yesterday, from the sentiment that we are getting, we saw that gold still failed to break this descending trend line here. Okay. And of course, earlier from our previous analysis from last week, we saw that gold still had to reach higher levels for it to indicate that there was still some bullish momentum on it. The bullish momentum is not too much on gold. And of course, we need to see how gold progresses, especially as we go into CPI. It failed to take out 1950 from last week. It also still failed to take out this descending trend line here from earlier. And still even then, there's still a descending trend line here that gold has still failed to break above. It broke above here yesterday. That's because the dollar strength kind of eased out a bit. But as you can see here, we still are having a bit of a deceleration on gold. So what are the key levels to watch of gold as we go along today? Key level, of course, to watch from last month, we have that level of 1895, which gold last saw before ADP. Okay, this one around here. When we got ADP last month, but one, which was a really high number, we saw gold rallying all the way here. And ever since then, gold has failed to break above these levels here. And it has got into a bit of a deceleration, and that deceleration is still showing like it's still intact. Intraday, of course, we're having a lot of consolidation on gold, and of course, as we know it, we still have a lot of things to expect as we go along. I suspect that if gold manages to go below this descending trend line, we might see it continuing all the way down. And of course, even then, this liquidity grab we're having on gold is quite interesting. Shows us that we have quite a bit of sellers sitting here on the sideline waiting. And as you can see here, the NFP rally did not hold, and we are potentially going to see it, maybe retracing. Yeah. Of course, there's a bit of a symmetrical triangle here that is forming, as you can see here. And of course, we likely have to see what happens with this here. And if we break above this level here, then of course, you might see gold, rallying a bit higher as we wait for CPI. If the CPI readings we get tomorrow are actually indicating a decline, gold could potentially take out this level here, which it saw earlier in the week, and even likely chase higher levels. Crossing over to Euro USD. Euro USD has had quite a bit of a development, and we have been having a bit of distortion on this particular currency pair. And the purpose for that is because the reason for that was because there were quite a number of events that were having on this particular currency pair. But then again, there are still quite a lot of bearish flags on Euro USD, quite many. And then even yesterday, the Italian crisis really put a lot of downside pressure on the euro. Speaking a bit about the bank's forecasts, the last that we had from the banks where they were targeting 1.12, which of course was achieved somewhere sometime last quarter. And we might expect that even now, we do not have a lot of targets for the banks above here, which of course then provides a Euro USD, a bit of downside momentum for now. Still intraday, we are seeing a bit of a recovery from this level here. And we're expecting that it's likely that we will potentially see Euro USD, if CPI for the US comes in lower, then Euro USD could rally and take out these levels here. However, we still have this descending trend line, as you can see from earlier, still failed to break it. Still another descending trend line there. Gold has still failed to break, and we can potentially see it. If it breaks the descending trend line, it could rally back higher. And if it does not, then we are going to see Euro USD potentially pulling much lower there. Crossing over to USD JPY. So I'm going to use the Keltner channels for now. Okay. And the Keltner channels will show us what is actually happening with price, with momentum here. And as you can see here, we are having a lot of breakouts for USD JPY. The breakouts are quite many, even from analysis we did last week. And as you can see here, we still have still many more breakouts. And again, from the fundamental side, the reason why we're having USD JPY rallying is because the Bank of Japan, with its current stance, is not allowing room for the Japanese yen to have a lot of upside momentum. And of course, the reason for that is that they want inflation to continue to increase in Japan. And so we still have a lot of potential to see USD JPY moving higher here. And this indicators the Keltner channel, as you can see, we have a lot of price action above the Keltner channel, which is a clear indication that there's still a lot of bullish momentum for this particular currency pair. So let's cross over to GBP USD. So GBP USD, as you can see here, still it's not respecting the descending trend that we have drawn here. We had the BOE last week, as well as NFP, and this didn't provide a lot of room for upside move on GBP USD. That's because the Bank of England indicated that they are going to cap they're likely to have their interest rates rising up to 5.75%. They have not indicated to us that they are likely to have interest rates rising beyond that. And that's the reason why we had GBPUSD having that bit of a pullback. We have an ascending wedge we saw on it earlier last week. And as you can see here, still broke below it. And, you know, we are still seeing a bit of a downside trend happening on this particular currency pair. As we go into CPI for the US, if we get, of course, a lower CPI reading, we could potentially see a GBPUSD rallying to take out this area here, and even likely, of course, take out this high of this descending trend line. However, if we fail to have a lower reading there and CPI actually comes in higher, we might see GBPUSD, you know, going all the way to test this area here. Some of the banks like ING have indicated that their GBPUSD is likely to face some downside pressure towards $1.25. And we are likely to see how that pans out as we go along. But you can see here, there are still quite a number of areas that GBPUSD still has to achieve along here. So it's just a wait and see game, and we have to see how things progress. So someone is asking about US 30. So I think my US 30 chart is somewhere here. I don't know how updated it is. Okay, this is an old chart. Let me cross over to here so that I can give you guys recent current move on that. Just a moment. All right. So US 30, we had a bit of a rally yesterday. And of course, the reason for this rally was because the Fed governors, that was Fed Hacker, as well as also, I think Bauman indicated that they are likely to have a bit of a rate hike. Rate hikes are likely to slow down as we go along. But as you can see here, we still had this failure to break this descending trend line here. And what we're having with a bit of these movements here is majorly from the fundamental side. But as you can see here, we had a push higher, and then we have had the Dow, you know, failing to break this descending trend line. It broke it here, and again, there is still a bit of momentum for it, majorly from the fundamental side. But I expect us, if we get a lower CPI reading, then we could be chasing this area above here. Failure to do that, of course, major level that we need to take out is this level here. If we manage to take this level out, then of course we are going to have a much bigger pullback on this particular index. Yeah, so that's what I can say on this one. But by and large, we're having quite a bit of momentum here for Dow to the upside. So if we talk about the NASDAQ here, NASDAQ, of course, as you see, NASDAQ has been under a lot of pressure. The reason for that is because of the Apple earnings which we got. The Apple earnings were not that great. They had a decline on their iPhone sales, and of course, iPhone sales contribute to more than half of the revenue for Apple, and we had actually the lowest iPhone sales since 2016. So it's been quite a bit of a downside move for NASDAQ because of that. That's why NASDAQ seems to be failing to, yeah. So here, this downward move began when we had the Fitch ratings, and it has been moving all the way down. Then, of course, we had a bit of a move lower here. NASDAQ, of course, again, failed to break this area here. This was because of a fundamental move. Again, yesterday we had the Fed hacker saying that the rate hikes are likely to come to an end, and also that they may remain higher. They may remain at the point they're at right now, and maybe potentially rise with time, but they don't envision that. So for NASDAQ, the reason why we still have failed to take out this area here is largely because of the Apple earnings. If Apple earnings did not disappoint like they did, I'm sure NASDAQ would not have had the pullback that it had. So going into CPI tomorrow, it's likely that we might have, if we get a lower CPI reading, NASDAQ is definitely going to move higher and take out the higher levels there. But it has to break all these different resistance points. We have one here. We also have one here. If we don't take out that area, then of course it's likely that we're going to have a bigger pullback there. So someone is asking about D40. Samuel, you're asking about D40. Let's cross over there. So for D40 again, D40 is still providing some upside. That is on the back of the news we got out from Italy, the clarification. This was the bottom from the Italy clarification, as we said. The reason why we had that sell-off, as you can see, the candlesticks, we had a bit of a breakout below this Keltner channel, which are showing us really good points for us to sell. And the reason why we have had this move this morning, moving all the way higher, is because of the clarification from the government of Italy. They said that the tax will be capped at 0.1%. Will be capped at 0.1% of the bank's assets. So that, which means the impact on the bank's profitability as well as overall health and strength will not be tampered with that much. That's the reason why we're having DAX moving higher. So I suspect DAX, again, as you can see, it has broken above that descending trend line. So really good opportunity for you to actually buy DAX there. And it's likely that DAX could potentially continue moving higher, and we could see it moving higher today, maybe to these points above here, and likely also to these points, right? Maybe higher here as we go along to these areas. But on the big picture, DAX still has to test higher levels. We still have very many areas for us to actually get in and actually trade. We could likely see a higher DAX as we go along. And again, for the Keltner channel, we have quite a number of breakouts above the upper channel. As you can see, we have a breakout here. We also have a nice breakout here. And it's likely that, of course, may put a lot of likelihood for an upside move there. So J Squad, hi. Good to see you here, J Squad. Yeah, it's been a minute. You're asking about moving averages. So I used two moving averages. First one is the 16-day moving average. Second one is the I think about 8-day moving average. So essentially what I focus on is that when the lower period moving average crosses above the higher period moving average, it usually provides me buy trades. And when the higher period moving average crosses below the lower period moving average, it usually provides me sell trades. So of course, we have to watch out and see what happens with time. Yeah, but that's essentially how I use the averages. So I think that's pretty much it. Someone asked about AUD USD. Let's just see what's happening with AUD USD. So AUD USD again, the China data as of this morning was quite promising. We had quite a good CPI number that came out from China, and of course, again, there's disinflation, but that does not mean that things are actually horribly wrong over in China. The inflation is an indication that things are looking fairly good. So I'm just trying to look for AUD USD. Okay, so I need to just switch over here quickly. It must be my snapshots here. That's the moment. So again, AUD USD, same thing. Most of the major currencies where the dollar is not the base have actually been progressing good as of this morning. AUD USD, this was the last analysis we had for it. We've been having it in a bit of a downtrend, but then again, it seems to have failed to break below this channel here, this level here. So I suspect maybe we could see it moving a bit higher. If it manages to break above this trend line here, then of course you might see it moving and taking out higher levels. Again, guys, please, if you're trading these different currency pairs, especially where you have the dollar involved, you need to monitor and gauge how DXY is performing, because DXY actually indicates to you the relative strength, for these different currency pairs. So please keep an eye on it and see how it's progressing, because it will make your analysis better and your trading entries and exits better. Yeah. So that's pretty much it for today. Nikkei, I don't know whether I have Nikkei here, but the Nikkei is actually biased to the buy. That's because of the liquidity. The moment we have a lot of liquidity in Japan, it really provides a lot of upside pressure for the stock market. That's why we've been having it crazy. Yeah, so just squad, I have two moving averages, not this are 8-day moving average. So they're actually standard. Let me just go to my standard chart here and see. Okay, so here they are. Okay, so as you can see here now, for instance, this is GBP USD. I'll have here again, I have the 6-day moving above the 14-day. And of course, the moment that happens, it's usually a buy indicator for me. Okay, and for the sell, when I have the 14-day moving above the 6-day, it's usually an indicator for me to actually sell. So lower period moving average above the higher period moving average is a buy indicator or buy confidence for me. And then of course, the lower period moving average below the higher period moving average is, a sell indication. So that's usually how I gauge it. Yeah. I use 14-day and 8-day moving averages. So either of them should be able to work. Then of course you could also use the crossovers. The crossovers also guide. Yeah. All right. I think with that, I wish you all an awesome trading day. And please, guys, please always make sure that you're following what's really happening in the markets, especially on the fundamental end, because they impact what you see on the charts. So always keep an eye and see what's happening there. What will happen if this is on the core, you mean, on the headline? Okay, this is on the core. If we get it as high as 4.2%, I just need to go and see what the core is. Core, I think we had a reading of 3%. I don't envision us getting a bump in CPI of 1.2%. That would be quite high. But if that happens, the dollar could essentially maybe rocket, if that happens, if we get that high over CPI. Yeah. Awesome, guys. I will see you.